So when you start investing, in my opinion, you must consider a lot of factors. That it's true that when you invest, there's a chance that your investment could go down in value, but you could manage the risk. You can find ways also to be strategic about it. That it's not just you trying to throw a dart and suddenly that you're gonna make money off of it. It's not that way. But what I want to suggest and I want to submit to all of you is that as you start deploying capital, it has to be in an investment that you can tolerate the risk. In this video, I want to talk about what are you supposed to do if you're investing in this bear market and it's your first time to actually invest and you're considering it, you have extra money, maybe you got promoted this year or maybe you got transferred, you got into another job and you're getting a higher salary, or your business suddenly breaking through right now and you have extra funds also that you can actually invest. From the videos that I've been making, you somehow thought it's a good idea also to invest that amount of money that you actually have. And that's what I want to discuss in this video. What are the things that you need to consider if you're planning to start to invest and you want to dabble into investing for the first time? Now, to make this super simple, I always tell people this, that you must need to know, you must need to realize what's the purpose on why you're actually investing. And I did so many videos about this on how you want to structure your investing. Are you actually doing it for retirement? Are you doing it for business? Are you doing it for your children's education? Are you doing it just for travel? Or do you have other midterm goals? Because that will define if it's for the short, medium, or actually long term as well. The second thing that you need to identify is the risks that you're willing to take. So please do note this, that everyone thinks that when you invest in something that's risky or there's an ability for your money to lose value, which is true for some investments, but it doesn't mean that you have to go that route also. You have one side of the equation where people think of investing as something that's risky, that when you put your money, you could lose everything or there's a chance that you lose what you get. People also look at it from the opposite side of the spectrum, where that they can't lose, that it's something that's a jackpot, that when they put their money, they feel that it's a lottery ticket that they can put in small amounts and they can hit it big and make a lot of money very, very fast. Let me address the second part first, that if you think about investing as like the lottery, then you've got it all wrong. Investing is not something that you just put your money and hope that it will go up. Please do remember this, that hope is not a strategy. You don't just put in money with the hopes that it goes up. You don't just put in money with the hopes that somehow, some way, it's gonna moon and you're gonna make money and it's gonna change the way you live. So when you start investing, in my opinion, you must consider a lot of factors. That it's true that when you invest, there's a chance that your investment could go down in value, but you could manage the risk. You can find ways also to be strategic about it. That it's not just you trying to throw a dart and suddenly that you're gonna make money off of it. It's not that way. But what I want to suggest and I want to submit to all of you is that as you start deploying capital, it has to be in an investment that you can tolerate the risk. Meaning, there are investments also that are low risk. When it's low risk also, the ability to lose money is lesser. I've made a lot of videos about this, that anytime you are faced with a equation where you have a chance to make a lot of money and then it's low risk, then that's something that's a bit shady. Because anything that's low risk, you always get compensated also with a smaller rate of return. So please do remember this: low risk, low reward. And that's the one thing that you need to define also. If you're the type of person that you're a low risk taker, you can still invest, but you can only put them in low risk types of investments. And what's interesting also is there are some digital banks right now in the Philippines, and I've made a lot of videos about them, that can give you 3, 4, 5, 6% return without getting as much risk, because they are FDIC insured and they're essentially banking products, they're savings accounts products as well. Or you can also look at it from a retail treasury bond standpoint, that you're lending money to the government. Those are essentially risk-free. So please do note that if you're investing for the first time, it doesn't mean that it's scary. You might lose your shirt if you make a mistake. It doesn't work that way. There are investments that will work for you if you are not a risk taker. The goal for you is to put money in the ground, like farming. Anything that you plant, it has the ability to be able to grow for you. If you don't plant anything, you don't put anything in the ground, then there's no ability for you to be able to earn over the long term. And people don't like earning also over the long term. Everyone wants to earn fast. Please do note this, that investments that are sustainable, they're not those things that are get rich quick, because when you focus on get rich quick, you fail to develop the skills. That's why I always tell people that instead of just focusing on what product or what investment to put it, also focus on what are the skills needed you need to deploy for you to be able to do well in that type of investment. If you realize it, I've been saying this over and over, that it's a conviction game, but the conviction game comes from also the skill sets that you have. So if you feel that there are certain investments that are not in your wheelhouse, then it's okay, because for sure there will be other investments also that will be in your wheelhouse that will also work for you. Now, in the same merit and in the same token, there are certain investments that are higher risk but will give you a higher rate of return. They're not as safe, they're not as risk-free, they have volatility. There's a chance that your money could go down, there's a chance that it could also go to zero, but it will give you a larger amount of upside. That goes for stocks, goes for crypto, that goes for NFTs, that goes for investing also in startups. But there's a large lure for people to go into that because there's a large amount of return. And what people fail to understand is when you go for investments like that, it's true that there's a potential that you could earn more. But every time you subject yourself to that, also, you must realize that there's a trade-off always if you go for investments that will give you a larger amount of return. Every time you go for an investment that will give you a large amount of return, you are subjecting yourself to a very, very large amount of risk also. That's what you need to realize. That's why when you go into projects that are new, that are risky, if you lose everything, it's part of the game. If you can't stomach the volatility, you can't stomach the chance that it goes down in value, you can't stomach that you may lose a larger chunk of your money there, then your money should be better off in assets or investments that are safe, that are fixed in return, that don't really move as much. Because investments, in my opinion, should be things that add value to you. It's not worth losing a night of sleep on, because it's not about finding the best investment. It's all about finding an investment that fits you the best. When it comes to investing, it may seem scary, it may seem daunting. However, don't let the fear of failing or of losing money also prevent you from investing. There should be a sweet spot in the middle where we should all be, that you're not looking at it from a gambling perspective that you'll earn a lot but without putting any risk, and then it's safe, and then you'll get a one-time big time shot of making a lot of money. Or also on the other side of the spectrum, you're playing it super safe, that sometimes those investments are safe, they don't give you volatility, they don't go down. However, what if you lose money to inflation? What if you miss out also on certain opportunities? That's why I've been also harping on the importance of diversification, because if you're diversified, it puts you in the middle, that you have certain investments that will protect you when times are bad because you're not as volatile, but you also have certain investments that will give you alpha, that will give you growth because they are riskier in nature. And the best way for you to be able to do that is to have a mix. If you think you're risk averse, meaning you don't like a lot of risk, then put more on investments that have little volatility, put more on investments that are not as scary, put more on investments that will give you a fixed amount of return, and then put lesser on the volatile one. But if you're like me also, that like that piece of volatility, then you could allot more in terms of allocation to investments that are more volatile, but also put it in some investments that are fixed, that could stabilize you, that could protect you when markets are down, or like what we're experiencing right now. It's not as optimistic, or it's not as bullish as what it was in 2021 or some parts of 2020. I know you're watching this because you have it in you also to invest. So I highly suggest this, that take the time already before you start planning to put that amount of money to study. I've made so many videos about stocks, about bonds, about REITs, about real estate, about NFTs, about crypto here in this channel. I'll put links down in the description below for you to be able to learn. Because at the end of the day, the best investment is still an investment in yourself. Please do note this, that when you take the time to study, when you take the time to learn, those are things that no one already can take away from you. Those are things that will help you make the right decision when it comes to your money. It can also prevent you from making large amounts of losses. People always want to get rich quick when they fail to realize that one of the best ways for you to be able to grow wealth over the long term is if you take it slow, if you study, if you take the time, you take the proper process for you to be able to do it. If you're trying to invest for the first time, congratulations. It places you in a very, very small number of people that are doing it globally, and I salute you, because when you invest, it gives you the ability to live life at your own terms. It gives you the ability also to take control of your own financial destiny. It gives you the ability to make your money work hard for you. It gives you the ability also to do what's opposite as compared to what everyone else is trying to do. Majority of the people want to spend. Majority of the people want to gratify themselves early on. Congratulations also that you are thinking about investing, because this is counterflow, and as compared to what everyone else is thinking. You look back and you look at yourself 10, 20 years later, thinking yourself that I'm glad that I started to invest. I'm glad that I started to put money in the ground. I'm glad that I've started to do this. Because just to be honest, at the start, it's not something that's gratifying. It's not something that's fun to do. Who would want to put money away that they don't actually get to touch, that they don't actually get to use? But when you realize that it's for something that you will use later on, that's when it becomes fun. I've never played a perfect game when it comes to investing. I had my own share of mistakes. But I never regretted investing. And second, I'd rather experience losses in investing than buying stuff that I don't need to impress other people that don't even like me. It's time that we shift the narrative. Wealth is not just about the stuff that you buy. It's not just about getting expensive stuff. It's not about just having a lot of material possessions, but it's having the ability to have savings and investments and the ability for your money to work hard for you so that you get to live life at your own terms. If you stayed up until the end, like, share, subscribe, and smash the bell so you get updated every time I come up with videos like this. And if this is something that appeals to you, we have more down below from the books that I've written, from the seminars that I have, and the thousands of videos that are here in YouTube. So, that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.